Right now, a lot of big companies are doing really well, and their stock prices are going up. That sounds great, right? But here's the catch. It's getting harder for regular folks like us to find good deals on individual stocks. Many of the companies that were a bit cheaper now seem expensive, and it makes you wonder if it's the right time to buy. And get this, people are still really keen on buying stocks. We've seen record-breaking sales almost every month this year. In May, everyday investors bought more stocks than in the last 10 years. It just shows how much excitement is in the market right now. But here's a heads up. Things could get a bit bumpy next week. There's still tension with Iran and Israel, and we're waiting to hear what the U.S. Federal Reserve will do about interest rates. Plus, there are ongoing trade talks between China and the U.S. All of this can make the stock market jump around a lot. Now, why am I telling you this? Because even with all this going on, there are still some amazing opportunities out there. We've found 8 stocks that are currently trading at really low prices, almost at their lowest point in a whole year, but they have a lot of potential to go up. Let's dive into these 8 companies, and guess what? The first one is a stock that even Warren Buffett, one of the world's most famous investors, just bought. And now, make sure you're subscribed so you don't miss any of our future uploads. 1. Constellation Brands, STZ. If you've ever had a Corona or Modelo beer, you know Constellation Brands. But they're more than just beer. They're one of the biggest alcohol companies in the U.S., with a range of wines and spirits. They even have a big stake in the growing cannabis market through a company called Canopy Growth. They focus on high-quality brands that people love. While many drink companies are struggling, their beer division is still growing strong. This company's stock is down about 35% over the last year, and 25% just this year. That means you could buy it for less than what Warren Buffett paid. It looks really cheap compared to what it should be worth, and experts on Wall Street think it could go up by 33%. 2. Global Payments, GPN. You might not know their name, but every time you tap your card to pay or shop online, there's a good chance. Global Payments is working behind the scenes. They're a huge company that helps businesses handle payments safely and easily. They work with over 4 million businesses in more than 100 countries. This stock has been struggling for years, falling a lot from its peak in 2021. It's down 20% over the last year and 34% this year. But because it's so low, it looks incredibly cheap. Our research shows it could go up by 63%, and Wall Street agrees with a 33% upside prediction. 3. Deckers Outdoor, DEC. Think UGG boots and Hoka running shoes. That's Deckers Outdoor. They're a footwear giant that's been growing like crazy. While UGG still makes billions, Hoka is the real star, becoming super popular in the running shoe world. They have strong brands and loyal customers. The stock has fallen sharply recently, down 41% in the last year and 50% this year, cutting its value in half. But even with this drop, it's still performed incredibly well over the past 10 years, up over 700%. Wall Street sees a 30% upside for this company. 4. Novo Nordisk, NVO. This Danish drug company is becoming one of the most powerful in the world, thanks to a huge trend, weight loss. They make popular drugs like Ozempic and Wegovy, which are changing how we treat diabetes and obesity. Demand for these drugs is so high that Novo Nordisk is now one of the most valuable companies in Europe. The stock is down about 44% over the last year, but it's been recovering in the last month. Over 10 years, it's been a massive success, up over 190%. While our analysis suggests it's trading around a fair price now, Wall Street still sees a 31% upside. 5. Lululemon, Lulu. Lululemon isn't just about athletic clothes, it's a lifestyle brand. They started with yoga pants and have grown into a huge global company with incredibly loyal customers and high profits. They've been great at selling directly to customers and have even done well with men's clothing. With international markets, especially China, just starting to take off, Lululemon's growth story isn't over. The stock has recently stumbled, down 22% in the last year and 38% this year. But it's still outperformed the overall market over 10 years, up 262%. Experts believe it's currently undervalued, and Wall Street predicts a 35% upside. 6. Crocs. Crocs went from being a bit of a joke in fashion to a surprising success story. This company is now a $5 billion brand, riding the wave of comfortable fashion. The classic Croc is famous, but a big part of their recent growth comes from buying Hey Dude, a fast-growing casual shoe brand. The stock is down 39% over the last year, but it's still up a massive 550% over the last 10 years. It's currently trading near its 52-week low. Our analysis shows it's incredibly undervalued, with the potential for more than double your money, 135% upside. Wall Street also sees a 38% upside. 7. Bristol Myers Squibb, BMY. This is one of the world's largest pharmaceutical companies, making huge drugs for cancer, heart disease, and immune problems. Even though they have a strong pipeline of drugs, the stock hasn't done well recently, partly due to old drug patents running out and concerns about future growth. The stock is up 20% in the last year, but it's actually down 26% over the last 10 years. This means if you invested $10,000 10 years ago without reinvesting dividends, you'd have less money today. However, it offers a very attractive dividend yield of about 5% and looks quite cheap. Wall Street sees a 22% upside. 8. Merck & Co., MRK. Merck is another giant in pharmaceuticals with over 130 years of history. They dominate today's drug market with blockbuster treatments like Keytruda, a top-selling cancer drug that brings in over $25 billion a year. Merck has a strong pipeline of new drugs in cancer, vaccines, and animal health, setting itself up for long-term growth even as Keytruda's patent approaches its end. The stock is down 37% over the last year and 18% this year, and it's also underperformed the S&P over 10 years. But like Bristol Myers Squibb, it appears severely undervalued right now, with a forward PE of 9 compared to its 5-year average of 13, and a good dividend yield of about 4%. Wall Street predicts a 26% upside. So there you have it. 8 stocks that are currently trading near their yearly lows, but could offer some significant opportunities. Remember, the market can be unpredictable, but finding good companies at good prices is key. Let me know in the comments which of these stocks you find most interesting. For those seeking to take control of their financial future, platforms like Interactive Brokers can provide access to a wide range of investment opportunities, allowing individuals to participate in the market and potentially build wealth over time. Click the first link in the description to learn more.